Hi everybody, Phill Grove here, and I'm here to give you a little bit of a market update and talk about some of the things going on in the real estate market. So if you're just getting into the real estate market, I got to tell you, this is the right place and the right time to be getting in, because something very interesting just happened this week, and that is that the Case-Shiller data came out, and for the 6th month in a row, real estate prices have increased. So those of you that have followed me for a while know that from time to time we give market updates. And one of the things we said back in 2010 is that the market bottomed in the third quarter of 2009. That was the bottom of the real estate market. Now, since then, some of the markets have gone down a little bit, some have gone up a little bit, but most have just kind of bounced along the bottom, and everybody has been waiting for an uptick, some discernible point in time where you can look at it and you can say, yes, it's really past bottom. And today, a little early this week, Case-Shiller for the 6th month in a row said we are on the recovery. Now, Case-Shiller's not the only ones to say this. There have been a lot of people watching this very intently, and the reason for that is because a lot of people want to and have historically invested in real estate money. For example, hedge funds. And let's talk for a minute about hedge funds, because something really interesting is going on with hedge funds in the real estate market. Right now, there are trillions, and that's trillions with a T, trillions of dollars in cash sitting on the sidelines. And if you've got any money in a bank account, you know that the banks are paying less than 1% interest on that money. So people have been scared to invest their money, so they've kept their money in cash, but they don't want to invest in stocks because it's risky, and they don't want to invest in real estate because they're afraid prices are going down. So they've just been leaving the money on the sidelines in cash. And the hedge funds have been looking very intently at the real estate market, trying to figure out when is it safe to get back in the water. And within the last several months, they have decided the time to get in is now. And what's been happening that's very interesting is hedge funds are buying up real estate like it's going out of style. That's why the real estate market is on an uptick. 1 out of 3 houses is actually being bought by cash, for cash. 1, because lending is still difficult to get, but number 2, because hedge funds are buying up properties like crazy. And the reason hedge funds are buying properties up is as follows. Look, if you just keep the money in cash, you're going to get less than 1% return on your money. However, if you take that same money, let's say $100,000, and you buy a house with it, now you can rent the house out. Who are you going to rent it to? All those people who can't get loans but need to live somewhere. And now, net expenses, you're going to get 8, 9, 10% return on your money just from the rents alone. So rental property, owning rental property, is a safe and very high return way of getting interest, getting return on your money. And it's a great investment, maybe the best investment there is, as long as you're sure that we are past the bottom. And the fact that all of the hedge funds are now all in the real estate business, that's telling me, and that's telling a lot of other people, that pretty much everybody at this point is sure that we are well past bottom in the real estate business. In fact, if you look at some of the markets that were the biggest hit by the downturn, markets like Phoenix, they're actually up 20%. The prices are up 20% over a year ago. Even Detroit, one of the worst hit markets, up almost 8 or 9% versus a year ago. So if you go to all of these markets, Phoenix, Detroit, Los Angeles, Las Vegas, houses are actually in short supply. Where I live here in Austin, Texas, we are in a seller's market. In some parts of town, there's less than 2 months of inventory. The general rule is if you've got more than 6 months of inventory, they say it's a buyer's market. If you're under 6 months of inventory, they say it's a seller's market. And almost no matter where you look, we are going back into seller's markets all over the country. So, how does this affect you? Well, good news is it's a good time to buy rental properties. It's a good time to be a real estate investor. Now, you could argue that it's always a good time to be a real estate investor, because whether prices are going up or prices are going down, there's always ways to make money in real estate. But when prices are going up, it's just easier. prices going up cover up mistakes. If you pay a little too much for a house, by the time you sell the house, it's worth a little bit more, and therefore that extra amount of money helps cover up a few mistakes that a beginner might make getting into the market. The other thing you need to understand is there's a perception versus reality issue. Back in 2007, everybody wanted to become a real estate investor because everybody knew people who became real estate investors between 2002 and 2007. But by 2007, it was arguably the stupidest time in history to get into the market. We were at the very, very top of the market. By 2009, nobody wanted to be in the real estate market because everybody had a perception that it was the worst time to get in. And here we are in 2012, and the perception still is that it's not a good time to get into the real estate market. But I guarantee 2 years from now, people will all want to be in the real estate market. And they're all going to look back to 2012 and they're going to say, gosh, I wish I got in 2012. So, what's the takeaway? 2012 is 2002 all over again. If you're in the market, you're in the right place at the right time. If you're just getting in, you're getting in at a great time. And I don't have to convince you of that because you've already probably convinced yourself of that, and that's why you're watching this video. One last tip as you're investing and getting into the market, you have to realize when it comes to perception and reality. The civilian perception of the market always lags reality by about 2 to 3 years. In other words, I said the market bottomed in the third quarter of 03. It's not until 012 that the hedge funds and everybody else really figure that out and put their money in as well. Civilians and the press are still going to be talking about real estate in very tepid terms. They're going to be just starting to talk about how real estate is hot again over the next couple of years. So you've got an advantage. Right now, the sellers don't realize it's a seller's market. The sellers don't realize how good the market is becoming. Your opportunity as a buyer, as a real estate investor, is to buy low and sell high. And it doesn't get that good very often. So welcome to 2002 all over again. I'm Phill Grove. See you on the next call.